everyone, and welcome to the European crossover webinar. And we see in the Bank of England exports its survey sees a 40% chance of a Brexit hurting sales, 14% chance of a boost. Bank of England says investment plans for the next 12 months have softened due to economic cycle. And see if we can, I was going to try and pop out the news for you. But that was 9-0, holds bank at 3/4%. Policy voters made 9-0 to maintain. Corporate bond purchases target at 10 billion sterling. Bank of England staff estimates Q3 GDP growth by 0.5%. BOE says recent news on UK macroeconomic data has been limited. Bank of England's August projections appear broadly on track, says regulatory price cap on household energy bills are likely to reduce in 2019. Turkish central bank says further monetary tightening to be delivered if needed. And that was a big one today too. Turkish central bank says to continue to use all available instruments to pursue price stability. Turkish central bank says further monetary tightening to be delivered if needed. And they raises rates from repo rate to 24% to 17.75%. Let's go and move this out of the way. See a little bit of a dollar pullback here. Euro's starting to push a little bit higher here at 16.29. And the cable, we still have not been able to close above this bias pivot. Move that here. That's right here. That I don't know, we're supposed to be 30.56 here. There's that 30.56 right here. I'm gonna have it right there because it's 56 is that key pivot. I had it on the support side. It's supposed to be on the on the resistance. We were above it at the time, so but it's 30.56, which is that key pivot. And we have not been able to get above it yet. We've gone above it, but we have not got that close yet. And if we can get that close above 30.56, then quite frankly, this turns to bullish. And that was the analysis that we had here for cable. Market attempted a breakout of the pivot 30.56, resulting in a new bullish momentum. Buy a pullback to 29.73, with trade validating on 2-hour close if we got below 29.32. But that upside target is going to be 33.17, which is at 38%, with an initial pause at 31.70. If we can get above here, that's really going to, you can see here, we'll really turn things around if we can get past this pivot on the close right there. You can see how important 30.56 is. But the target would be the 33.17, the 38% of this entire move. With the pause here would be here at 31.70. Cable holding fairly steady here. A little bit of a movement, but we were looking to buy these pullbacks because it looks like we're going to go in and flip this momentum to bullish here. And today's a big ECB day. We'll take a quick look at that. We'll see if we can pair back. I think that what we've done is now we're posted on the analysis on the Asian update. You know, we saw the dollar start to slip, and in the analysis we put here, and we're just doing a quick overview of the markets, and then we'll get into the news and get into the analysis ahead of ECB day, and we'll give you an idea where we stand on that. I don't know why the computer's running a little bit slow this morning. But here's what we have here on the cash dollar index. The little news bit I said here is the headline giveth and the headline taketh. Let me see, taketh away. Today, word leaked out, and that was yesterday, word leaked out that the U.S. administration has reached out to China. This is surely a perceived sign of weakness. The buck backslid below 95 on Wednesday. Nothing major at the moment, but I think the market has tipped its hand, and sell moves to 95.07 with a downside objective of 92.80 with initial pause at 93.72. Trade is invalidated with a 2-hour close above the all-important 95.32. And we've gone over this multiple times here with the cash dollar index. And you can see here, if we back this up a bit, here's the chart that I posted. Certainly, it looks like we're just going to go in and drop now. Blake can go in and make some comments as far as what type of formation we might be seeing here. But we talked about, I've been mentioning this here. I thought we could go in and probably pop some stops here. I kept saying I didn't believe that we have a brand new upside leg, but we were just one headline away from popping stops. Well, 5 stops. Well, we got the headline that came across that the administration, Mnuchin, had reached out to China. That's surely a big sign of weakness. And my thoughts there is, and I don't get involved in this political stuff, and it's not so much political in the sense as going in. Just one moment. My thoughts is as longer they continue with this, and this has been the thought over the last 5-6 weeks. My thought was, eventually in time, it's going to impact U.S. equities. I believe this whole trade business news and all these tariffs. And when it does, we can start to see a slide. And one of the things that I was referencing, and we'll mention about gold too, is we're moving into an area right now, or a period of what generally is weakness for U.S. equities. So with this whole China news, boy, we could really start to pull back a little bit. And I think going into midterm elections, that's the last thing you need. And so it's kind of really a true about face with the administration, with all this tough talk over the last 2 or 3 weeks. And remember, they just said last week, Trump said, there's no deal that China can give to us or offer that's good enough. And now all of a sudden, now they're reaching out, seeing what they can go on and restart up. So my thinking is, once again, when we saw that, then we saw the dollar start to backslide. And I think that's opened the door now for us to go and break out here with the euro. We'll cover some quick news. One of the big movers overnight, or big move, has been here with the Aussie dollar. And I know that Blake was talking about yesterday on the Face webinar about a lot of confluences here. And certainly we saw this nice move up here. I know he's been buying and then jumping out, buying a little bit, jumping out. He may be holding for a little bit longer term, but we'll go and start with the news. Obviously, today's big ECB day, but we'll quickly take a real quick look at that. The Australian dollar pain is very much the economy's gain. The Australian dollar is paying for the sins of others as investors short the commodity-exposed currency. Once again, it mentions about it being a liquid proxy for China and the growth we're seeing here globally. But it states here, foreign direct investment in Australia accelerated to 84 billion Aussie dollars. With the Aussie falling, our investors who've had exposure in the U.S. market are getting comfort in switching their holdings back into the Aussie dollar. We are seeing that trend, said Stephen Mackey, Brisbane-based director of fixed income. Despite the debt binge, Australia can still borrow at a lower cost in the United States. Just last week, yields on Aussie 30-year paper dropped to below those of treasuries. Robert Thompson, Sydney-based macro analyst, indicated that there's strong interest from Asia, ex-Japan, followed by North America, the United Kingdom, and Europe. Perhaps the high yields by the United States, a lower Aussie dollar, and firm hold on RBA encouraged a rotation into Australian debt. So we're seeing that, like I said, I think that is just it, a rotation, and why I think we could see, generally this is the time of year we see a little bit of a weakening here in U.S. equities, and why I think that this whole thing eventually may turn out to be perceived as, once again, dollar bearish in the longer run, and maybe we'll finally see the dollar start to dial back and maybe see the euro start to respond higher. But anyway, the thought was, like I said, that this whole, winding down, not winding down, but depreciation of the Aussie dollar has now, we've fallen so far, and we're being looked at that for some time, is that now assets are very attractive at this, it wasn't that long ago that we were 81 cents in February. Look at that, 81 cents. And here we are, 1,100 pips lower almost. I mean, so now people say, hey, it's what a great time to go in and step in and buy. They've seen I was referencing the mining index is at new highs or right at new highs. And at this time, you're starting to see what they're saying, a rotation from, some of the different assets, including U.S. assets, into Aussie, because it's such a value. Interest rates are still relatively, in a position where it's going to be favorable to go and park your money into Aussie dollars, really, because they're saying it is you've got a fiscally prudent government for the most part. And so we may start to see this get a bit of a rebound, especially if the dollar, in turn, starts to react a little bit lower. And we certainly could see, not to break down, but certainly a correction is warranted. And I think that could take us right here down to this, I mentioned here, this 92.80. That's just a correction, that's all. But I'll have Blake take a look at it and see what he thinks about this formation here. But certainly with the administration reach out, looks like they're going to be lightening up a little bit on that rhetoric. We already got the information for the Bank of England, no need to stay there. And we'll go on and move in right into the ECB, and then we'll run into our analysis. The European Central Bank looks all but certain on Thursday to firm up plans to end bond purchases this year and raise interest rates next autumn, arguing that the Eurozone economy has enough momentum to expand unsupported after years of stimulus. Indeed, Mario Draghi is likely to emphasize that the expansion is solid enough to absorb spare capacity and thus generate inflation. Even it could still take years to push consumer prices back to the bank's 2% target. Quantitative easing needs to end at the end of this year, not least for political reasons. Consequently, for the message to be consistent, the outlook must remain okay. Economists at Bank of America, Merrill Lynch wrote in the note. The ECB will announce its policy decision. That'll be actually when we're still on the show. Eurozone government bond yields were a little changed on Thursday, with the market largely sidelined ahead of the ECB's decision. Despite Draghi's optimism on growth, the bank is likely to cut some of its forecast after a string of weak figures over the summer. According to the Reuters poll of economists, in somewhat a technical move, the bank is likely to say it will have the bond purchases to 15 billion euros a month. That's sort of going to be euro bullish, but it could still say at the end of the bond year, this remains an exception. And if all certain is to keep its guidance unchanged for rates to stay at record lows through next summer. We think it would take a more severe turn of the economic data or risk spectrum for the ECB to shift its language. Draghi may also provide further details on how the ECB will reinvest funds from maturing debt through sources close to the discussion. Said those decisions will not have a meaningful impact on policy, as they will be mostly technical moves to ensure the process. Let's go and move this out of the way. And we're going to get started with our analysis. So it does look like we're starting to try and break out here with the euro. We'd already seen a pretty good little fallback, and depending on what Draghi says here, generally what we've seen over the last couple of years or so, the ECB meetings are generally euro positive. Even when things look bad, it's still, I remember one ECB meeting, I think that was like about a couple of years back, or maybe it was 3 years back. We were trading at like, oh God, I think it was like 4 something or 5.26, and the euro dipped back. I think it might have been like 5.80, and the euro dipped back like about 60 pips during the presser. And by the end of the day, we were up like 280 pips. So my point being is over and over and over and over and over again, we've seen these ECB meetings be positive. Even when everything's negative, somehow the euro turns around and finds the a positive. And as I mentioned here, with the dollar starting to slip, and once again, based on that headline with Steve Mnuchin reaching out to China, certainly I think that we've tipped our hands as to where the dollar may go. Inversely, obviously the euro, euro comprises 56% of the cash dollar index. So we're starting to see this euro trying to hold up. I thought we may dip one more time, but one of the things we pointed out repeatedly has been the importance of the 1541 on a daily close, and the market's been able to defend it. So the strategy here going into today, I think the euro is trying to break out. It's holding up fairly well. It looked like we could maybe slip, and we're acting about this market being a little bit tired. I mentioned that yesterday, but once again, with the administration, Steve Mnuchin reaching out to China, certainly looks like all this harsh rhetoric, which looked like wasn't going to go away, now all of a sudden, the administration is quiet on the tweet front. And now with the Steve Mnuchin reaching out, I think the dollar index, to a certain extent, has tipped its hand in which way we're going. And so at this point, I think the move here, be buying the euro. And where would that area be? Well, I think it's going to come in right here around 1562, and I'll show you what I'm referencing here. I'm not saying we can make it to here, but look, right there. That's going to be this value area right here. So we know that this 1583 is a very important area. We talked about it. Remember, day before yesterday, that was actually our bias chart support, and we were actually trading at 1583. And when we were saying, hey, be careful, if we get beyond this area, we could slide and try and go after the 1541. They did just a few pips, and they just kept holding there at that 1583. Well, we were still trading this area, and then all of a sudden the comments came out that Steve Mnuchin was reaching out to China, and that took the wind out of the sails for the cash dollar index and opened the door for the euro to move higher. Now, we haven't pushed beyond this area. We did make a little bit of a push up in here, and we did keep our resistance at 1626 at the time. There was a little bit more resistance, although I didn't think we were going to go up there at that high yesterday, which was around the 1648. And that's about right where we ran out of gas. And we'll take a look. Right there. You see this tip right here? Right there. And that's where we ran out of gas. But this is the value area if we can get it. So if you're looking to go in and buy on this, which looks to be in the infancy of a breakout, the two areas are going to be right in here. That would be any dips in here into 1589. But the real value, if this market slides for whatever reason, this is your value area right here. This is where I think you're going to see a lot of people stepping in to buy that. Once again, I think the dollar, I think that really took the wind out of the sails for them. Some of these dollar bulls was them reaching out, because really what the market's been breathing or has been the acrimonious comments and tweets about, oh, China can't do anything for us. Hey, I think I saw there on the Bloomberg comment, the Trump had told the Bloomberg reporter, hey, the relationship may not be so good now with Japan, or they may not like my whatever, because I'm going to get tough on them. So now all of a sudden it looks like that's been the oxygen for the index to move here, although it hasn't moved to new highs, and that's been the gripe that I've had. So now if they're going to start to soften up, I think we can see this dollar index come in. And we've got past Labor Day, so now the market has been sitting there waiting for something to develop. And I think we may be getting that now if we're going to get the dollar pull back. This is your value area. So it's going to be, if possible, if we wait till the meeting, if we get something anywhere down here, 1563, that's where I want to go and be buying here. The trade isn't invalidated unless we get a 2-hour close below 1532. You remember 1532 was our support a few days ago, and it was only taken out by what, at the time, I think was 2 pips or something. Then we came down a little bit later, a couple days later, to go in and test and go down to 1526. The market's holding up relatively well. So that's what we're looking at. Resistance, if we go in and get moving here, I think the resistance on a short-term basis, if we pop up, is going to come in right here at 1698, but we'd be looking for bigger moves overall. But we have to have wider ranges on ECB day, so it's going to be right here for 1698. Just like on NFP day, we have to widen these ranges, 1598. Support is going to come in. This is the area, if you can get that. And we're breaking up really want to see here, which is 1563. The trade's invented if you get a 2-hour close below 1532, 2-hour close. But the key, remember, is nothing's changed. 1541 is the key daily close level. Now let's go and move into cable. I think this is great if we see cable move back here, because I think cable's also trying to move higher. But this has been that key area that you and I have discussed for a very long time. That's why I have it in maroon. I always call it the bias pivot. Prices get above it, the bias turns north. Obviously, prices get lower. We start to rotate lower. The key thing though being is how many times do you see this market touching? And how does the market react? And you can see 3056 is just huge. The pivot, you go down, come back to the pivot. Right before the pivot, you stall. You come to the pivot, you get above here a little bit. You start to, so we're trading, we're fighting on both sides of the battle line. We start to rally up, the market loses. And what happens when they get below the pivot? They try to hang on to see if they can defend it. And down we go. We come back up to the pivot for another fight. Once we break away from the pivot, those guys ahead. And guess what? When the market decides to correct 500 pips, where does it find support? At the bias pivot of 3056. And you can see as the market vacillates between back and forth, and how that 3056, the breakaway once again, works as a launching pad. So fast forward to where we are now. Certainly you can see the importance of 3056 on a daily close. If we get a daily close, we get this daily close above 3056, and certainly it looks like things are the market is holding up very well overall. Yeah, it's suspect to these headlines, but they're starting to. The news keeps on coming up more positive. Remember, Germany was going to, on England, and then on the UK, and then all of a sudden they reverse that, within a few hours. But the market seems to react very well, and even when the news is bearish, the market holds up very well on those dips. Then, of course, we got the whole new thing. It's going to be working things out favorably for the UK. So we're on the cusp, I think, of turning this into a true bullish momentum. You get that daily close about 3056. Well, there's my target there, which is going to be 38% right there, 3317. It could maybe pop up to 47. That's the target. We're going to be bullish, no doubt about that. Here on the coming in here, if we can get this price, let me move back in here. I don't know what's going on, but my computer's running pretty slow. Pretty slow this morning. Probably should have rebooted or something. But anyway, if we can go in and get any moves down in here, it's really going to come in right there. And hang on. In just a moment. Okay, and I want to be right here's where we're looking to go and come in. It's going to be 29.73, which you take out these two lows here, not the low mark, but right in here. So it's going to be 29.73. I want to be a buyer here, and any dips down here to 29.73. I don't think the wheels are going to come off the caboose, but I like buying this market here at 29.73. I'm liking that for our support today. Not for the intraday support. We've got some big action today. So once again, we want to allow for wider ranges. So just one moment. Now on this move to 29.73, the move's invalidated if we get a 2-hour close below 29.32. 2-hour close below 29.32. That's where the trade would be invalidated. And my upside target, as I showed you, is up to 33.17 with an initial pause at 31.70. So I'm looking for a move to 33.17. Buy and move down here to 29.73. That's the optimal entry point. The trade's not invalidated unless we get a 2-hour close below 29.33, 29.32, but we're looking for a move to 33.17. This is on the idea that we're going to see the dollar index start to break down. And once again, the cable's been responding very, very well here. When we look for the resistance, today's resistance, it's coming right there. It's going to be 31. We'll go with right here, 31.31. Now, but once again, like I said, the trade is buying at 29.73 and buying in that area down to moves to 29.73. Trade's not invalidated unless we get below 29.32. That's what I'm looking at from technically speaking. Not offering buys and sells here. I'm just saying what I'm looking at for myself. It's not invalidated unless we get below 29.32 on a 2-hour close. I am looking for a move up to 33.17. We get this daily close above 30.56, and it's going to be, in my opinion, it's going to be blue skies ahead. And certainly the cable is responding. Also, is getting the positive news. So when you got news and technicals going your way, that's usually the strongest sign right there. So we're going to say here, for immediate purposes, for the on our intraday analysis, even though we're widening it, it's going to be 31.25 of our resistance. Once again, I'd be bullish, but where would we see some resistance? The market take a pause. And once again, I like the 29.73. Invalidate if we get down to 29.32 on a daily, on a 2-hour close. Apologize, 2-hour close. Let's take a look here with the Aussie. We've really been in the basement, and it looks like it's now trying to go in and turn around. Support now, which you're going to go with the technicals. Actually, right there. And I know he's been crazy. He's been picking it up, and then dropping, picking up, and so I'd like to see hear his comments. Really, I think maybe moves back to this area. People are going to be trying to buy that back, and they may be trying to really jump in. So this is. Right here is going to be 71.44. That's going to be our intraday support. Resistance now, well, this thing could really start to launch off, and really the first area for them to take a pause at is going to be 72.55. You know what, let's go with that. The reason I'm thinking is because if the dollar does start to break down, whether it's today or rolls into tomorrow, that's what they're going to be going for, this area here. We'll see if we got any kind of fibs to look at. And I'm talking about confluence. Actually going to be this one, really. That's after a significant rally after, well, 72.24 would be the 23%, and this is probably where the 38%, which is 73.09, and you can see the 73.20 is just huge. But for right now, today, it's going to be 72.55 if we start to get a break, where the market would probably take a pause. If things get going, things get cooking, where would they likely start to lay some off? Right here, 72.55. Still very bearish, even though it appears things are starting to turn around here. Let's go move into the Kiwi. Well, you know, it's certainly not responding or reacting the same way the Aussie is. I mean, we may be able to blast beyond here if we do start to see a little bit of, you start to see the dollar start to slide. And really, this is just going to be just plain old short covered. This thing still looks sick as a dog. But on a short-term basis here, we'll get right here. You see here, we'll go with that. We'll give it a little bit of the benefit of the down here. Actually, right there, 65.25 for support. And nothing that looks particularly bullishly promising. On the upside, we'll just move this just a little bit higher, right there, 66.07. Let's go and move in here to the dollar CAD. Boys, this pair has stayed weak like nobody's business. We talked about selling any rallies up in here into 31, was it 31.10 to 25? Look at this thing. And, you know, we talked about the one guy yesterday, or day before yesterday, and I was glad he got out. He actually got out right here. He bought in the chat room, bought the dollar CAD. He was up about 30 pips. I think he was talking to me and Joe. And he said, I wonder what I should do. And I was like, God, you know, it's going to be on the defensive for the next few days. You know, yeah, this is a great area to sell, but they probably have to go and get back in here. So that's my point, being defensive. But holy smokes, I didn't think it was going to take another dip. I thought we'd probably maybe dip a little bit more, test this area. And maybe we could make a move here, and then people, you know, will start to steady. And then they try and go, oh my goodness, they just went and took it and whacked it some more. Support you can see from a technical standpoint, 29.73. If the dollar takes a move lower, obviously we can push lower, but the dollar CAD's already had a pretty good run here. You see the importance of 29.73. On the thought, and we're not that far away, that we can push lower, let's just go and move this. It's going to be right there. A little bit of a stretch, 29.51. So that'll be about 50 pips lower. 29.51 is going to be on the CAD. We're well below this area now, so there goes that. Well, left side, it looks pretty tough right there, which is going to be 30.73. We'll go with the technicals, and that's going to be 30.91. So you'd want to sell any rallies into this, going towards this 30.91 at this point. I know Joe in the chat room, she's been tearing this thing up like nobody's business. This market, and the reason I pulled this back, it's still bullish. It's still bullish right now. You look at it a little, and I was saying from a long-term perspective, even from here, right there, you see, it's still bullish. We're going to probably have to break this area right here to say, well, as long as we stay down in here, then we can start to spin it around, say it's range. Probably we can change that as early as tomorrow. But we got to give it a little bit of the benefit of the doubt, let the day play out. But yeah, we can be able to start to move this into a range. And I put that here in case someone's wondering, well, why the heck do you still have it as bullish? Well, yeah, if you looked at it over 2 or 3 days, you probably say it looks terrible, but in the little bit longer medium term, it's still bullish. But boy, oh man, what a pretty big pullback. Let's go move into the dollar Swissy. This one, to me, it feels like it's kind of given that hint, and we were talking about that with the dollar. It did come here. We weren't able to take out this area. Remember, we had that at 97.52 and 56, and it certainly looks like it's susceptible for this market. One of the things that is concerning too is our support was, remember, it's going to be 97.09. We got below the 97.09, and we're holding. Okay, we got below there, and there's our pivot. We've talked about that before. We've talked about that in regards to the cable. And you can see that 97 cents is a huge pivot right here. You know, back and forth. A lot of fighting going on here as the market wages for control of the line. And then once we start to move away, that almost works like a launching pad. And when the market reaches, you know, par 40 and then decides to, you know, fall back almost 700 pips, we pause before we get there, but look where it stops off at. And then they try to make one more last hurrah. And then once we got below 97, you know, sound the submarine horns. It was down, 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 down she goes. Well, once we got past the same thing, it was blue skies ahead. Well, now we're below this pivot. My thinking, we can now start to probably continue to push a little bit lower. And to me, that kind of opens the door for the cash dollar index then to, you know, ensue on its correction. And we'll get to that. But yeah, that's concerning to me that now we're back below 97 cents. So resistance at this point, we're going with just straight up technicals. It's going to be right there, 97.25. That would be our resistance now. Things would have to really change to start to jump back above that. And support 96.53. We're just going with the technicals on this for right now. 90 and 653 is key there, but that'll be the support right there. Although I don't know if a whole lot of people are trading the dollar Swiss, but you want to keep an eye on it nonetheless. And let's go move into the dollar yen. Well, we had a here for the pivot in 1166. I've said it before and I'll say it again. This is a head scratcher. It really is. I mean, one of the things that we talked about, the old saying here that I used to say was, it's all about the ZBs, and those are the 30-year bonds. And obviously, those continue. Hello? Oh, I thought I heard someone saying something. Okay, I thought I heard someone saying something. But you can see this is still continuing to rotate lower. So certainly that's supportive of the dollar yen. So, you know, in a sense, that makes some sense. But I'll tell you what, I'm still scratching my head on this one. I think it's been a tough market to trade. I haven't touched it in a while. I think I did maybe about a month ago or 3 weeks ago or something like that. But I just haven't really done anything. I know Blake himself has spun out of it a few times, and some of the people in the room were trading off and on. I know Amir was trading it too. I guess maybe it was 3 weeks ago, maybe 2.5 weeks ago. I did a couple of trades or one trade. I really don't remember. I've stayed away for this most part because I just don't know. I mean, other than a couple times it's hit in here, but I'm just scratching my head on this one. I really am. So Once again, going back to the technicals, there's our bias pivot we've talked about. And you can see how important it is. That's why I like to find these pivots where the market will start to lose momentum, or if it's a key battlefield, you know you're going to be going backwards and forwards. So you can see 1166 is a huge pivot. I don't see where we're going to turn around and start to, as I talked about the dollar index yesterday, is I thought it was a headline away from hitting some buy stops. But that being said, I just don't see where there was a catalyst for a new leg up. And I'm talking about the cash dollar index. And right now we're referencing the yen here. I just don't see where there's a catalyst out there that's going to launch a new leg up. So do we hang around here? Well, if the dollar index, I'll give it to the dollar yen in the sense that the dollar index is breaking down a little bit here, yet the dollar yen is still hanging on. Obviously, it's benefiting from higher U.S. rates. I'm not sure what's going on here. Now, we do have the ECB decision coming up. So looking here, no changes here. 1166, 1095. And ECB decision is coming up. Hang on one second. Let's go and pull this up here. Generally, it's not the decision in and of itself that moves the markets. Is generally, you know, after the presser. Hang on a moment. Well, about 2 minutes away. Let me go on and see what we're going to do here. And I'll try and read the headlines for you, but here's the cash dollar index. And I'm looking just to sell rallies into this 95.07-ish area here and look for a breakdown. Let's see what they got. Okay, here we go. Any second now. The Drogon says high inflation result of Turkish central bank's wrong steps. So he's still doing that. Okay, here we go. ECB says the president of the ECB will comment on the considerations underlying these decisions at a press conference. Says regarding these things come out so quickly. Keeps the interest rates at levels at least through the summer of 2019, and in any case for as long as necessary to ensure the continued sustained coverage of inflation levels. And not a whole lot of reaction, which is generally the case here. ECB said at today's meeting, the Governing Council of Central Banks, that the interest rate on the main refinancing operations and interest rates on the marginal lending facility and the deposit facility will remain unchanged. So no real reaction at this point. You can see here we're just quiet. So let's go move in now to the cash dollar index. So look at the cash dollar index. We've been making these little stabs up in here. And although I didn't believe we had a brand new leg up, I thought we were probably just one headline or one tweet away from, hitting some buy stops. And we talked about the acrimonious stance of the administration or the president himself. And now all of a sudden, the administration has done a 180. Steve Mnuchin is now reaching out to China, and certainly that puts China in the driver's seat, and also gives the idea that, okay, well, one of the things that the dollar index needed for its oxygen, because it certainly wasn't making higher highs, and we talked about this earlier this week. If you ask me, between the economy being strong, the Fed raising interest rates, and all this acrimonious talk, my thinking is we should be well above 97. 97 should be like, okay, if I can buy this thing back to 97, I'll get long again. And we just haven't been, no matter how, acrimonious those are, we just have not been able to do any real advances. We've done some stops a couple of times, but, it was only the central bank, the whole issue with the Turkish central bank, that got us to finally break higher, and we quickly lost that. We made a couple of quick stabs here, and, we talked about the Chinese delegation coming. Nothing came out of that. Trump even saying just last week, that gave us the extra bid into Friday's close. I'm going to, I'll go in and slap another set of tariffs on $276 billion worth of additional Chinese goods. And we came up here on Friday and we started to slide back. And now all of a sudden the administration is reaching out to China. I guess a goodwill gesture to restart things. To me, I said in the analysis, it's a perceived sign of weakness. Now, not that I want to be harsh on China. My thinking is that's how the administration has played it. So now with that idea, then you take the oxygen out of this move, and now that allows this move to come back for a correction and takes the oxygen away, in my thoughts, from the dollar bulls. Once again, like I said, I thought we were one headline away from just gunning some stops, and then we'll see what happens, and we'd probably ease back and start to pare back. We just took away the oxygen now, so now it appears we're in the infancy of now a pullback. And once again, not that the dollar is going to fall apart, but is it worth, or is it reasonable to think a pullback? Certainly is, and I guess on a bigger basis, few people seeing like what could be possibly a head and shoulders. Well, that's to be seen. But what I'm looking at, the analysis I'm suggesting, is technically speaking, selling rallies to 95.07. So resistance, at least what I'm looking at right now, doesn't mean we don't get above it, but this is where I'm going to be getting into looking at is 95.07. Well, we'll still have the resistance. Okay, so let me put it this way. I'm looking to sell rallies back to the break on this trend line. And to me, that comes in 95.0708. And I'm looking for a move down here to 92.80-ish, right there, with a pause at 93.72, but a move down. The trade's invalidated, that's the way I'll look at it, if we get a 2-hour close above the all-in 95.32. 95.32. You know how important 95.32 has been. I've been pointing that out. Here's that 95.32. I'll highlight it. This one area stopped the market's dead in its track. This doji, right there. And you can see here, every time they made a launch, they rolled over. I told people, be careful. I mean, once again, I thought we were one headline, one tweet away from hitting some buy stops. But those that use that 32 have done well to just keep selling against it. So, okay, we make a move. Okay, I just put my stops above, 2-hour close above 95.32. We slide off. But yesterday, this is when the market reacted. We were still hanging around, looking like, hey, look, we're running this trend line. Everything looks, hunky-dory so far. And then all of a sudden the headline comes out. I know Blake shared it in the chat room. Steve Mnuchin reaching out to China. Whoop, we slide back. Now ahead of the ECB, I guess the wheels weren't going to fall off the caboose. But to me, it certainly looks like we can now work well. I'm going to ask Blake about what he thinks about this little formation. But that being said, I'm looking for 92.80 with the pause at 93.21. selling any kind of rallies up here to 95.8. Trade invalidated with a 2-hour close above 95.32. So resistance comes in at the all-important 95.32. Support, this 94.88 has been holding up relatively well. Actually, previously holding up like a champ. But we certainly look like we can go and work lower. So where will support come in? If this thing starts to rotate lower, I would not get in the way of this thing. If the same way I was saying on the way up, if they gun to stop, somebody's going to get in the way. We could see people that are still bullish at dollar, and they say, hey, look, I'll get out on the close if we take out 94.50. I'll get out on the 4-hour close below this or that. Look, to me, I'm just going to go right here, 94.09. I'm not even going to try and stand in the way of this thing, if we start to slide. There'll be areas where the market may find some support, and that may come in probably right there, 94.36. So I'll tell you what, we'll go with 94.36, but that might be a bounce. Okay, so from 36, they may bounce up to, like, let's say 68 or something, but then they probably rotate lower to head to 94.9. So we'll go with 94.36 for the support. And that's just an area where I think you could see some short coverage if we start to go on and slide there. And that'd be an intraday support there. Let's go on and move in now to the gold market. Well, let's take a look at what we had a resistance. We talked about, well, we had 1204, but 1207, a daily close, key, daily close, as was 1194. Key, daily close, 1207. Well, we closed above 1207, and this market looks like it wants to go higher. Now, one of the things I want to comment was that I will give it this to the gold. When the dollar's been making these little spikes higher, the cash dollar, right up in here, gold has pulled back, but I tell you what, gold's pulled back like trying to drag a screaming kid into the doctor's office. Gold has pulled back, but it's been fighting it most of the time, and at least mildly diverging to the positive side. Now it looks like gold wants to move higher. My thinking is we've gotten above this little trend line here. Okay, and it has been diverging. One of the things that I was noting in my analysis was we're moving into a seasonally weak period for U.S. equities. Now look, S&Ps look fantastic. They still look very good. They do. But we're moving into a period where traders are going to say, cautious. I don't think we're going to turn around and fall all apart. But on a valuation basis, we've seen this talk over the last couple of people saying, oh, yeah, I'll nibble a little bit on gold because, you know what, from a valuation basis, it's had a pretty good knocking. And why don't I park a little bit of money just on the safety side, like sell some equities and buy a little bit of gold. And so we're so low, and now the momentum's starting to change. At least it's positively starting to change a little bit. So I think you can get some people to step in and buy. So that being said, I'm looking to go on, and I think any dips here to 1204, buying. I'm looking to buy any kind of dips. Doesn't mean it's going to make it to 1204. I'm just saying you see it pull down to 6 or 7 and it's holding. And we know 7 is key on daily close. But my thoughts is moves to 1204. As long as we don't get a 2-hour close of below 1197 with a target here of 1245, and that's a 38%, and that's coinciding right here with this area. Almost here at this 48, right there. So I'm looking to buy any moves going towards 1204 with a stop at 1197 on a 2-hour close. That, to me, that would invalidate that thinking if we did and we slid back below that on a 2-hour close, and I'm targeting 1245. It's doing well, and the whole thing is, once again, it's been pulled by the nose ring by the dollar index, but I think the dollar index is a little bit tired here, and certainly we've started to see that now all of a sudden the administration, as of yesterday, it looks like they're softening up a bit on China, and that's going to work against the dollar. And I think we could start to see a little pop back here in gold. So for today, support's going to be 1204. That being said, we know that 1207 is key on the daily. Remember, here's a 1207. That's going to be support, but we'll look for 1204 for support. And on the upside, well, the upside has got to be our old friend here, 1219. Remember, we were looking at the market profile, and that really caught the top here. I was looking for this market to run out of gas at 1219, and sure enough, it ran out of gas at 1219. It poked its head at, I think, at 1220 and change, but man, we rotate lower. Actually, we did it all on the same day, and that was a surprise. I thought it'd at least be like a 2 to 3 day move. By the end of the session, it was already at 1208. So it's 1219 for resistance. There we go. And we're almost at the top of the hour. This is the only thing that'd be like a little bit of fly in the ointment for the gold is U.S. interest rates. Golly, look at this. Interest rates are moving higher, yet gold is even diverging away from that. Boy, holy smokes. I mean, like I said, if the dollar starts to slide, you're really giving the mix for gold to move higher. I still like this 41.27 here, so that's going to be support and resistance. I don't see any changes here. I'm going to go with that. 41.27, that was a support. 42.26. And I don't know if we can do a quick flyby on the DAX. We may not be able to get that in time. Hold on. There we go.
Hey, Paulie, go ahead.
Oh, hey, Blake. Yeah, we'll just finish up with the DAX here, and then we're done.
No problem. No problem. Well, Coach isn't here. It's just me.
We're gonna go right there with resistance, 12.105. We're just going with the technicals, folks. You can see that 12.105 right here. That's been a huge level, almost like, in a sense, like a pivot. You see that? We fall to 12.105. We rally. We go to, once we get there, it's hit the horns on the submarine, and we're down. And once we get past 12.105, it's blue skies ahead, and they end up correcting from 13,100 to 1,000 ticks. And where they find support, a triple bottom at 12.105, and off we go. So that's our resistance right now, 12.105 for the day. And support, short-term base is going to come right there, 12,030. So 12,030, 12,105. Pull this back down. We didn't get a chance to do the buns. That's okay.
No, go ahead. You know, we've got a little bit of time. Go ahead.
So 12,030. 12,105. Let's go into the buns. This worked out pretty well overall, our resistance. Remember, we had 59.74. We're down 20 ticks, and we never really poked our head very much over 74. Support's going to come in. And I really don't see any reason to change. We had 59.57. We're right there. It's going to be, I'm going to keep that 59.57. So we'll keep the 59.57. It's been, look, where they rotated down, they got as low as 59.50 and they're up to 59.59. I'm going to stay with that support, and the resistance is going to stay the same, 59.74. I don't see any reason at this point. So then that completes the buys chart for today.
on ECB day, and there's a whole thing. If you want to go on and take a screenshot real quick, and that's it. So Blake's coming on now.